Hey guys, Mike here. So, oh boy, what a day in the market, or a red day for most stocks, as you can see right here, especially high beta stuff. And we're going to go into why that is, all the charts, what's actually causing this. Because, I mean, I said yesterday, one reason is because, what was it? I told the members Friday, 2,210 stocks and ETFs in overbought territory. And we need to pull back because you can't just go straight up. Shocker there. So there has to be a narrative to why this happened. And so I'll show you the things you need to watch out for that might be breaking out. Which hurts certain types of stocks for sure. And then we'll go into obviously what to look out for tomorrow with economic data, earnings. And if you're a Pinterest owner, I would not look at the chart right now until at least after dinner because I don't want to ruin your appetite. And so it's a rough one, but it's amazing how the market reacts to certain stocks, right? And so getting to the chart today, I told the members this morning the bottom range is going to be 408, between 408 and 418. You can see. So, gap down in the morning, went back down to 408.10 and bounced perfectly. Come right back up and then just traded in this range right here, right? And so very tight range. Didn't exactly close the gap like I thought we would, as we've been doing. I've showed you many times. And we come out to the larger view here again. It's heading back down to the trend line I told you about there around the 409 area. This is all about support and resistance flip right here, right? We end up testing it once, bounce. Now we're coming back down to it again. And we did hit it in the middle of the day today and bounce, as you can see right there. And so the question is, will it be able to maintain that 409-ish level right there? Because if not, obviously, again, I'm waiting on the upward trend line to get tested. But if you look, everything's still fine right now. The RSI is looking healthy. We're making higher lows. There's no divergence that I see any way, shape, or form. And we could just come down. I want to see if we bounce off that ascending trend line that's developed. And if not, if we break through that, we could just come right down into this ascending triangle right here and start wedging out again. And of course, then we got Tesla. And what I tell you about this area, this is the important area right here. The 190 to 200. What do you see on the RSI though? Starting to get overbought, right? Starting to get frothy, but that's Tesla for you. I mean, it happens, right? And then this right here stayed in an extremely tight range, gapped up, straight across, and shockingly, we couldn't break the 200, right? And I keep, like I said, Friday, I believe it was, with Tesla, it's all about this. You want to call it a call wall, you can. I don't think there's enough options there to call it a call wall, but maybe there is. But you can see it's the biggest spike, right? And so, again, you get past that 200. I don't think the market makers, really have any reason to get in the way. Honestly, it's just getting past 200. Are they going to allow Tesla to do that or not? And look at that. Some people right there with 285 calls. And so there's a lot of bullishness, as you can see right there. And Tesla actually benefited from this. This is the number of S&P companies with higher analyst target price. And you can see it's been rocketing up since October, right? Like this is what they believe is going to happen. They're coming in with higher prices for these stocks, even though the earnings really look pretty bad, actually. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And I believe Tesla, if I'm not mistaken, I know I saw at least 2 price upgrades for them, which is usually what you see happen. And when it starts to stall out of a certain area, all of a sudden, you'll start to see the price upgrades try to push it through that 200 area. That's what it is. And so that's why it was green today. Everything else was red. And so, no surprise there. But again, it's all about if market makers want to allow it to get past 200, or are we going to do a healthy pullback since it's done a huge move up so far? That's really the big question, right? Now, the things you have to watch, because, what's been going higher and what is not good, especially for high beta stocks, crypto, things like that, and it's yields in the dollar. And this right here is the 2-year. And you can see on the 2-year a massive move up since just February 3rd, right? So just a few days here, over 10%, right? And if you look at what's going on with the 10-year, you get the same thing. Looks identical. And I told the members last night, I said, the chart of the week is going to be the dollar, right? The dollar absolutely attempting a breakout. And obviously it's been getting just absolutely destroyed in the end of 2022 and 2023. But you can see right here, I mean, that area right there has been resistance for a while. It actually bounced off of it right there, as you can see, in the last few days. And if we go in here, and you can see 3 big green candles there as it bounces off. But this is the next resistance level. Can it break above that 103.50 area, 104 area, and actually hold? And so that's really the bigger question. You can see this is just since the beginning of February. So a nice move up for the dollar. And what stocks really, really dislike a strong dollar and strong yields? And it is semiconductors. Every semiconductor goes red, right? Except one, and it's NVIDIA. It finally went red, but it was actually green a lot of the day. This one's been just fighting against gravity, and I mean, it is so far up there and such a big run. But to show you what I'm talking about here, That right there is the SOX, iShares Semiconductors ETF. That is your dollar, and then the yields are up top right there, right? And you can see when the yields go up, the dollar is strengthening. The semiconductors do not like it. They sell off, okay? And you can see right there when the opposite is happening, semiconductors go on a huge run. When the yields are going down, dollars going down, semiconductors love it. And if you look right there, what's happening now, yields and the dollar are starting to go on a little run. And of course, we zoom in. You can see semiconductors are starting to sell off slightly, but again, they've had an enormous run so far. And then another one I want you to watch, and this is important, right, is TLT. This is the 20-year Treasury bond ETF. Watch that 109 area right there, because what you're looking at is, you can see we got rejected over here. It's trying to move up, get above it. Not quite happening, but understand, if it breaks above that and able to retest and hold and start moving up, that is a deflationary signal, okay? Bonds go up, bonds go down in an inflation type environment, but they usually go up, and it kind of signals a deflationary type environment is happening. And remember, bond investors are usually considered the smart money, and so that's key to watch. Again, you can just keep wedging right here all we want. Eventually it's going to break one way or the other. But if it breaks up, that's actually a good sign as far as inflation is concerned. Now, watch the VIX. What's happening to the VIX? The VIX is attempting another breakout. As you can see, it's been rejected multiple times off the trend line since December right here. But it's moving up. It's trying. It's in that area where a lot of people like to hedge right here. And I know I saw a whole lot of huge orders for VIX call options, right? And to me, again, that's just hedging. They're just hedging it. And because it's in that area, it's like, why not play it, right? If you put it out far enough into March, April or something, I mean, it's down there. And when it pops, we know we usually get a big move. And plus, with all the stocks that are getting overextended, I mean, it's in the thousands here. You know, it's kind of a good risk reward, right? And so I think that's what you're seeing happening. And, you know, as far as earnings, you know, right now, tomorrow, obviously tomorrow we're going to have the travel and the oil stocks, BP. I'm sure they'll brag about how much money they're making. That's really the only two I see in the morning. And then Enphase is a big mover, so I want to see which way that one's going to go. And then Chipotle is really the one I want to hear from more than anything else. Because last time the CEO, remember, he bragged about how much they were able to raise prices. I think it was 5 times in a year or something. And he knew he priced out the lower income folks, but the middle income folks were making up for it, so he didn't really care. So now I want to see, are they still raising prices and they still don't care about bringing back certain income brackets, or just forgetting about them? You know, I mean, I don't really like hearing that from the CEO, but it's business, right? And so I want to see what he's got to say about that. And are we still just, you know, going out to these restaurants like it's 1999, okay? And then there's really only one piece of economic data I want to hear from, but more importantly, Fed Powell will speak tomorrow at some institution around noon. And then you got Barr speaking as well, another FOMC member. And then the only economic data I want to hear is consumer credit. And I mean, I think we realize, guess what? I mean, I just showed you yesterday, we're running up the credit cards, right? But, you know, and the delinquencies are getting higher, but it's nothing, you know, it's not at a point where people are like, oh my God, this is terrible. And so that's something to think about. I'm also going to do some research, because somebody brought this to my attention. One of the members shared it and everything. It was talking about the Treasury, right? And where all of a sudden this market starts moving up and everything, and where liquidity came from and stuff. And looking at it, it actually came from the Treasury, right? They have this account, the general account they use, and they just drained it down, right? Which puts money into the system. But what people are worried about is, and again, I'm going to do more research on this, and I'll probably do a member video first on it, but I'll eventually bring it to you guys, which is like they have to, you know, end up getting back the money, right, to raise the balance in that account eventually. And when they start to do that, that will take money out of the system. And people are worried about, well, what's going to happen, you know, when that happens, right? And so, you know, it's almost like what you see happening. It's going to be curious to see what's going on with banks right now, which I read today was we're pulling money out of banks faster than any other time in history because we're putting it in treasuries, right? I mean, I put some money in treasuries, so I pull some money out of a bank to put in treasuries. I mean, it's because why? It's the first time in, I don't know, 13 years, 14 years, 15, whatever it is, that they've been this appealing, right? That people are like, oh, this is great. And it's so easy to do now versus, you know, back 20 years ago. I mean, it took me 5 minutes to create an account on the website and do it. And so it's so easy as well. I mean, I just saw a YouTuber who's got like 100K just sitting in treasuries, and you can imagine what who this benefits more than anybody else is people that are retiring right now, right? Because when you get retired, you don't want to lose your money. You rather go in risk-free assets. And if you saved up, $500,000 or whatever it is, and you're drawing 4.5%, 5% risk-free, and again, nothing's 100% risk-free, but the only way you're going to lose it if the country goes belly up, right? And so, our defaults on our debts. And so, and if that happens, guys, we got a whole lot bigger problems to worry about than the Treasury part of it. So, I mean, yeah, that would be a disaster of epic proportion, right? And one day that'll happen. Believe it or not, it'll happen one day. I mean, it's just going to happen eventually, just because the government we have, the people running the government, I mean, they're not fiscally responsible in any way, shape, or form. And eventually all debts come due, and that's just what's going to happen. So, I mean, but yeah, I can't wait to see it, because I was reading about the banks and stuff, and they're trying to go with different avenues and trying to raise the money, because we're putting our stuff in treasuries and not keeping it in there with them as much. And then, of course, like I said, I'll do more on the Treasury part, right? When they start to refill that account, what it's going to do to the system and stuff. And so, and also tomorrow in a video, most likely, I'll show you guys how really we've just been, I mean, there's this, it's not brainwash or anything. It's just this market we've been in so long, where people truly believe that a market it doesn't go up if the Fed funds rate is going up and inflation is going, all this stuff. It just doesn't happen. But that's just not true. And I'll show you on the chart what I'm talking about. Okay. And so you kind of get an idea that we've just been in this market from 2010 and 2020. I don't even know what to call it. It's an illusion or whatever you want to call it. We're being brainwashed. But, oh my God, it has to be zero rates to do this, to go up as fast as we went up. That might be true. But again, I'll put that in tomorrow's video. I cut out days. I didn't want it to be 20 minutes long. So anyway, hope you got something out of it. Hit the like and subscribe button if you did, and I will see you guys tomorrow.